Hello. This is Jonathan, and you're listening to the Joney Talks podcast, the place where we help you achieve your financial goals. Hola, amigos. Hope you're having a great day wherever you are. And if you're a new listener to the show, special warm welcome to you. I really appreciate you tuning into the show. And if you're a returning listener, welcome back. I appreciate it even more. In today's episode, we will speak to my friend Emanuel, who founded a crypto Facebook group back in March. We have all seen the recent headlines and impressive run-up of Bitcoin and other cryptocurrencies since the end of last year. It certainly got people interested again in crypto since the highs of December 2017, and I was looking for someone to shed some light on those recent events. So I found that Emanuel was the right person. The crypto space is not only about the Bitcoin price and the headlines. As you will hear, many things are also happening behind the scenes that will have an impact on our finances in the coming years. So even if you do not plan to invest, it is definitely a space you want to understand. Little disclaimer, so if you're a total beginner to crypto and Bitcoin, I would recommend you first listen to the episode I recorded with Ivan 1.5 years ago, or you can also listen to a recent episode that my friend Michel from Michel is Money Hungry made. The guest Jesse explains the concepts very well. Worth a listen if you're new to crypto. Anyway, this episode is for you if you want to learn more about crypto and go beyond the mass media headlines, you want to know more about what is going on, and you want to know where the crypto space is headed. So without further ado, let's hear the interview. Hello, Emanuel. How are you doing today?
Hello, Jonathan. I'm very well. Long day, but very excited to have this opportunity with you today to speak about the crypto market. Yes. How are you?
Yes, I'm very good as well. And yes, I'm excited as well because, of course, there's been a lot going on in this market since, since forever, but mainly since October, November, we have seen a huge rise in price of Bitcoin. And I must say that I was following the crypto news and the crypto markets, and then not suddenly, but over time, my interest faded. And then suddenly it rises up again. So the market wakes up. And of course, I'm interested. And I think for the listeners, it's important to understand what has been going on. And that's what I want to discuss with you, because I think you started a Facebook group recently to talk about this, to tackle these issues. Can you tell us a little bit about this Facebook group that you started?
Yeah, sure. So I'm like you, also in some FIRE communities. Mm-hmm. So people who invest and who want to reach financial independence somehow in different ways. And well, as you mentioned, with crypto becoming more and more popular, I saw that there were some people trying to talk about these topics and this asset class in these FIRE communities. But I could see that there were, I would say, half of the members of these communities that were really, really against crypto, and they were really shouting and saying, "Yeah, this is pure speculation, etc." So, very averse against it, and so I decided I wanted to create a community that values crypto assets in their path to financial independence, and where we could discuss different investment strategies around crypto assets and exchange ideas. Basically, that's how this group started, and I launched it in March 2021. Mm-hmm. Yeah, and now I have every 2 weeks, every 2 and 3 weeks. I don't always manage to do it, but I try to have a meetup online on Zoom where we discuss different kind of topics.
No, really good. I mean, I joined your group. I haven't attended the meetings, the Zoom meetings. There was a clear need for this group. I think it's nice because, of course, to me, if somebody wants to reach FIRE, so financial independence, retire early, there's various ways to do that. And there's the common way to do the index fund and chill and to, contribute over time to your portfolio. That's great, but it's not incompatible with some crypto, a bit more risky. But if done well, why not? I mean, I'm not fully on crypto neither, but I don't see the harm in it. But I think it requires quite some education. It's new. There's a lot of fuzz in the press, and it may be hard for somebody to trust it, or to even to say, yeah, I'm going to join this group, or yeah, but I'm skeptic. It's okay. It's understandable. It's normal. It's already difficult with the stock market itself. So imagine the crypto markets. It can be very overwhelming. So Emmanuel, very good, and yeah, great initiative. So yeah, so my first question to you, Emmanuel, is why was there such an increase of price in Bitcoin and other cryptocurrencies lately? I mean, since October, November, we are recording a bit after the big wave, but why do you think there was this sudden interest again?
Yeah, so the major reason because of this increase in price is, first of all, we have the cycles that's happening in Bitcoin, which every 4 years you have the halving of the mining. So the number of Bitcoins mined are halved, and afterwards we always have this bull market coming. And the last one was in 2017, 2018, and then you have the bear market afterwards. So it's a cycle, but if you zoom out, then in the past 10 years, Bitcoin has been always increasing, and on average, Bitcoin is increasing 150 to 200%. Yeah, making it actually a very, very safe asset to invest for the long term. And what we have seen since, as you mentioned, September, October, you have MicroStrategy with Michael Saylor, who has been heavily, let's say, advertising Bitcoin and going public with his acquisitions. And then you have had really a wave of hundreds of institutional investors investing into Bitcoin.
Emmanuel, before we move on, just for the listeners, just two things. So can you explain a bit what is the halving of the Bitcoin, or how that works, and why this halving will cause a bull market? Why is there an increase after a halving?
It's simply supply and demand. It's let's say the reward that miners get to contribute to the mining network, the security, let's say, of blockchain and then Bitcoin. They get a Bitcoin as a reward, very simply said. And this is the incentives to contribute to this network. And it's a protocol that has rules, that was created like this in 2009 by Satoshi Nakamoto. And yes, exactly. And every 4 years, he decided that the amount of Bitcoin that can be mined will be halved. So creating an effect of decreasing supply and in a way, a deflationary asset. And the maximum of Bitcoin that will ever be mined at 21 million, right? This is the magic number, and making it more and more scarce, and also more and more less and less supply available.
Yeah.
And every time we've seen in history, so after each cycle halving, we have seen that there has been an increase of the price.
Very, very clear, Emmanuel. And then who's this Michael Saylor?
Yeah, he's the CEO and founder of MicroStrategy, this famous company. I'm not even sure what they exactly do, what their business was before Bitcoin, but
he's some sort of influencer or some personality in the crypto space.
I think you can say that nowadays he's really the major person advertising Bitcoin as the ultimate asset against inflation, hedge against inflation and fiat currency. And then for him, well, he's really a maximalist, I would say. I'm personally not a maximalist. I own several different cryptocurrencies. I see more Bitcoin as a hedge against inflation, so a store of value rather than really a currency. But so he has made a lot, and he has made this whole industry and this asset class really evolve into something where institutions now invest. Let's say this way. And so you had really a wave of different institutions investing, and I think the event that had a major impact also for many retail investors was Tesla then buying or announcing that they had bought 1.5 billion Bitcoin in February 2021.
Yes, indeed. But it was already by then, I think the crypto was already at 30, 35,000 already, I think. And then.
Exactly. So we had the price when MicroStrategy invested, I think it was around 10,000. Then we were going on a side trend. Then you had many institutional investors coming in. That was November, December. And then we increased over the 20,000 and then really when things went above the 30,000, that was in January. And then, as you said, February, you had Tesla coming in. Then you had major other announcements, just such as Visa announcing, that their merchants could use USDC stable coins. I mean, all these kind of events had
positive news that sparks. I mean, that pushes the price up and the interest.
Exactly. And if you look on the Google searches, then this bull market is really led by institutions, because the worldwide Google searches for Bitcoin indicate that retail interest is actually lower than we had in 2017, 2018. And I also read some reports recently. You really see that it's institutions that are investing heavily. Also, the latest, I don't know if you want really to go chronologically into what happened. Well, then we had...
No, I think we can stick to the main trends. I think, if you continue on the institution, I think it's great. Yeah.
Yeah, because then, we had this all-time high of 64,000. And then we had later on the drop. Also, many... we call this FUD, so fear, uncertainty, doubt. a lot of really bad, let's say, news coming out, such as China banning, mining, and you had then Tesla announcing that suddenly they would not accept Bitcoin anymore to buy a Tesla car. Who would anyways pay with Bitcoin for a Tesla car? But these things, and then saying that Bitcoin is very bad for the environment, the energy consumption, etc., and really mass media just copying each other and spreading this bad media coverage of Bitcoin. But if you look at the on-chain data that we have, that's visible, because as you know, blockchain is public, and Bitcoin, every transaction transparent. You can see everything on it. So you can see the wallets basically holding large amounts of this asset, and they have been accumulating more. So what we have seen there, this latest crash that we had in May, basically it was an unhealthy market, over leveraged. So many new retail investors coming in and leverage. So they were margin trading and borrowing to buy more and go long, and this was just unhealthy. And so we had a snowball effect, a reaction happening, and really many positions. I think I don't exactly remember the day, but when we had this huge crash, I think there were $15 billion of value liquidated. This is huge. This is huge.
Yeah, and especially if it's retail investors, it hurts even more. I mean, of course, then this price, this market trends, it's interesting. I mean, I think everybody can understand that. But then why does it go to such prices? I mean, is there a target price we should have in mind, or is Bitcoin really going to 100,000, 1 million? I had Ivan on Tech on this podcast. He mentioned something about 380,000. That was 2 years ago. But so there's always this crazy values announced, and where should we position ourselves here?
Very good question. Everyone comes up with a number, and if you look at big banks and financial service providers who have their own in-house analysts, they all have to come with a number, because that's what they get asked for. So every expert has and there are thousands of millions of self-proclaimed experts on the market, and everyone has a number and a reason. I would not come up with a number. I just would look at what is happening right now in our world, and I see the crazy adoption. So you have JP Morgan, Deutsche Bank, Goldman Sachs, Fidelity, Morgan Stanley, Visa, MasterCard, all these kind of service providers now. They kind of propose this asset to their clients, and we have something that you cannot erase, which is that 35 to 40% of all the US dollars ever in circulation have been printed in 2020. And this is just a fact. And this also means that, well, there is kind of inflation that's gonna come, right? And people have a negative interest rate in Europe, so you don't have many possibilities to generate yield. Also, these banks that have high net worth individuals, they don't have many possibilities. And one of the possibilities where you can still get very, let's say, interesting interest rates are crypto assets, and also decentralized finance, where you can get still high yields nowadays.
Yes, because just to put things in perspective, because with this inflation coming, for example, if somebody has $100,000 or $10,000 or euros in his bank account, that means that next year he will have 9,500 euros or dollars in his bank account. I mean, it's if it's 5%. I mean, okay, it's extreme, but basically the what you have today, it will depreciate in value.
Exactly, and you can see that real estate, for example, becomes much more expensive. It becomes more difficult for someone to buy a house from year to year, and you have certain raw materials where you can see it more than normal, I don't know, goods or things you find in a supermarket. But in general, I think we can really see that your purchasing power is decreasing more and more. And people are looking for hedges against inflation. So you had gold in the past, and now you have Bitcoin, for example. And Bitcoin is disrupting gold. And if we get to the market capitalization of gold, then, we can, coming back to your price targets. I think it's just a question of whether Bitcoin can get to the market cap of gold, which I think is 10 trillion or something. Then you can multiply this market cap times the price, and then where we can be with the Bitcoin price. So certain people think we will be in 2030, we will be at 500,000. Certain people think we will be at the Bitcoin price of $1 million. Mm-hmm. What I believe is that it's going up, it's deflationary, and it's a very good investment where you can just dollar cost average in and buy every month a little bit or every week. Definitely better than keeping your money on a bank account where you're going to lose money, where your money is going to be less and less worth. It's a good, I would say, alternative to ETF or index investing. I believe personally better. I don't invest in index investing. You don't have a long history to really prove. That's maybe the index investors who will say, yeah, but for 50 years, we have the history that proves that it's working. Yeah. Exactly. Yeah, that's true. We don't have the history, but also history is not always a proof that in the future it's gonna go that well, right? So.
Mm-hmm. And okay, I see, and it's been said before, Bitcoin is the new gold, the digital gold. So then, if Bitcoin really replaces gold at some point, well, yes, the calculation makes sense. It's just huge numbers. But then what about currency? I mean, because as such, it's often defined as a digital currency. So are people really buying stuff with it today? I mean, like when I lived in Oslo, there was this restaurant that could accept Bitcoin. That's where I attended some meetups. They accepted Bitcoin, but I haven't seen many retail stores or restaurants that accept Bitcoin today. So are we going there?
Yes, we are going there. And you can see like El Salvador, who now announced that Bitcoin will become legal tender in their country. And I think they're really, let's say, the first mover in these countries. And I think you will have many other Latin American countries that will follow, that show interest and that want to do the same as El Salvador. And then you have also in Africa countries. And in fact, I think that Bitcoin is solving already and creating financial inclusion in certain countries, especially in Africa, with micropayments. And you have the new Lightning Network, I think, that will decrease even costs of this. But I'm not an expert on transactions on Bitcoin. I personally see it more as a store of value. And for me, the asset that I'm more a fan of is Ethereum. And for me, Ethereum is really where the whole new financial system is built on, that is currently disrupting all financial services. And it's the Internet of Money for me is that. So it's Web3. It's the future. It's where basically you can. Everything you find in traditional finance is being rebuilt there, but in a way where you as a user are benefiting from everything that the bank was cutting off. So for example, if you have lending providers, right? And how is the normal bank, they make money on your money when you put it on a bank account, at least in the past was like that. And they were lending it out and they were getting interest and fees and they were keeping this. And they were giving out a little bit of something for the user. But on these lending platforms you have in DeFi, for example, decentralized finance, well, these fees go directly to you. So you benefit a lot more. And that's why also in decentralized finance, you can get much higher interest rates than you can find in traditional finance.
Okay, so we are all becoming mini banks.
Yes, that's exactly what it is. And that's for the first time in history that a financial system is being adapted from retail before major legacy financial systems.
Okay, because yes, and you know, Emanuel, I've seen even last year, in 2020 on LinkedIn, there was a survey that said the skills you need to build, or that is the hard skills. The number one was blockchain technology, and then there was programming, there was some other stuff. And then
Solidity, probably. Solidity, which is the language, the program language of Ethereum. Ethereum, yes, exactly.
But this was part of the skill in general. I'm not even talking about tech industry. It was in general, the top trending skills. And then, in the soft, then you have... of course, communication, negotiation, etc. But in the hard skills was really all related to blockchain in number 1 and 2, I think. So there are trends. The market is going there. So we need market needs programmers. They need people who understand it. That's no
exactly.
doubt. For me, I think with DeFi, as you mentioned, everything will be maybe not visible to the end user, but at least things are being created and made. And I think there's new positions coming out for programmers. I think they will be...
Yeah, you have more than 300 projects that are being created on Ethereum. And that's just Ethereum. Then you have Ethereum competitors like Solana, you have Binance Smart Chain, for example. And all on all these blockchains, you have plenty of projects that are being created and value that's created. And this is really disrupting and make things more innovative and bringing things forward, right? Mm-hmm. And you can see, I read this report from Hedge Fund Report, and that was with major crypto hedge funds, I think 150 to 200 that were surveyed there, and 42% of these are using decentralized finance to generate yield with staking, for example. So this means they have a certain cryptocurrency and they basically lock that cryptocurrency in that network, and they get interest from the network for allowing the transaction. So it's very interesting to see. And this is I think the trend to which we are going. And then, of course, I looked into what could be the next big thing. And so you have DeFi, you have NFTs, so non-fungible tokens that will also become very, very big. And then you have the whole part of security tokens that are very, very small right now. because the whole digital assets space is divided in cryptocurrencies. So you have payment tokens like Bitcoin, for example. Then you have utility tokens like Ethereum. Then you have the securities tokens, and these are asset-backed tokens like debt, stock, real estate tokens, basically all kind of financial instruments that are going to be replicated on cryptographically represented on the blockchain. And then you have all the fiat-backed tokens like stable coins, for example, USDT or USDC. And then you have all the central bank digital currencies that going to be also created soon, future. And this together with the NFTs form the digital asset space. And currently, if you look at numbers, this digital asset space is around 1.6 trillion market cap. So a market volume of 1.6 trillion, majorly dominated by crypto assets. But if we look at numbers in 2025, this is going to be together with security tokens. It's going to be a 15 trillion market value represented. So this will be 7% of the world GDP represented on the blockchain. And this will be the 15 trillion market cap.
Oh, it's huge.
It is really, really huge. And this means that security tokens that are currently very small, they will be 50-50 equal with crypto assets. So I think maybe finding certain projects there would be also a very good long-term investment. When you say long-term, well, quite fast, because 2025 is not even in 5 years. But a good investment to find certain projects like this.
Okay, well, that's quite a lot of info. I think there's a few things that we discussed. You know, the thing is with crypto, you can go in every direction. We can talk about politics, involvement of governance, governments, of the footprint, the ecological footprint that it has. But we will not have time today to tackle this. Maybe one last thing before that I wanted to mention is that I talked to a friend of mine, and he's really into the space. And we were talking about reporting our taxes.
Yeah.
You know, we were talking, we were thinking, but maybe there will be a trend that it was just a thought, where we brainstormed together that there will be two systems parallel. So maybe you will need to report your crypto transactions, and then there will still be the fiat. So what we use today, your euros or dollars or whatever, Swiss franc. So you maybe when you need to file your taxes, you will submit two reports. Who knows? That was a thought we had. And maybe in the future, it will be one consolidated report, but maybe there will be this transition phase. Who knows? It was something we were thinking, because of course the government, they will not sit back and relax. I think they will want to have their share as well, which is okay. I mean, we need to build roads and everything. So it cannot be outside of the system. I mean, but that's my thought. Somehow they will want their share and they will want to participate, not necessarily to make money, but to still maintain the healthcare and the education. So I'm not saying it's the future, but it could be.
I think what will happen is that's I cannot talk about other markets than Europe, where I know a little bit. I'm far from being an expert, but what I heard is that they're working to form kind of a digital identity, and I can imagine that this digital identity will be a certain way to identify you as a person in this world of blockchains, and probably they will then link everything to this identity. So also a credit score and many other things that will be linked to this. Also, when you look at the markets, I think Europe is the one where they try to give certain regulatory certainty to institutions now, because I think they try to regulate. You have the market in crypto assets regulation, under which you have the payment and payment cryptocurrencies, and then the utility that fall under. And then you have MiFID II, which will be then all the STOs, so security tokens, that will fall under this regulation. And this is not yet regulated, so it's not yet accepted by all EU states and the Commission, but it's something that's in development. So I think then, on the other hand, you will have the taxes, and this will be something that each EU state will have then to decide themselves. And what can happen also is that you have certain countries that want to favor the creation of crypto apps. So like we can see with Malta and Portugal to attract the people from the crypto industry, and favor these people and giving them some advantages. For example, in Belgium right now, it's not really regulated. And if you are a long-term investor, if you don't speculate and you don't trade, for example, then you're not taxed right now. But this can change, I think, in each EU state.
No, very good. Thank you for your perspective. And then, okay, Emanuel, we talked about a lot of topics. So, for the listeners, I mean, if they're still with us, there's it's a jungle of information. Huh? I mean, you obviously did your job and you're really active. But where does one start to find information? Where do you start to study step by step to understand blockchain technology? Who can you listen to? Because, there's so many people on YouTube or even you get the ads on social media. So you get good stuff, but you get not so good stuff. So where do you find your information, for example?
Yeah, it's very difficult, as you said, in the way that it's really the wild west, and it's not really regulated, and everyone can create content nowadays. So on YouTube, as you said, you have thousands of YouTubers, but one that I found really that has value content is Coin Bureau.
Okay.
I would definitely go there. Then you have certain newsletters that you can subscribe to. One that I really like is Bankless, and they also have a podcast series and a YouTube channel that is really informative and with quality content. Then Twitter is very important on crypto. The crypto Twitter is extremely active. And this is basically the representation of the thoughts of the people momentarily when it's happening. Everyone shares it. Of course, you need to be with a critical mind and filter things. And yes, it's true that there are people who say bullshit, if I can say, and they just spread things, and they also shill, like we say in crypto.
They push for one particular project or coin.
Exactly.
And sometimes it's S coin or an exotic coin, let's say.
Yes.
So they can make some money. So yeah, that's all the things we need to look for. So yeah, quality information is really important. So yeah.
This definitely, I learned everything from YouTube, from reading, from, I think there are certain books that are quite nice, the Bitcoin Standard. I'm currently reading a book that's called Crypto Asset Investing in the Age of Autonomy by Jake Ryan. I think you need to really be motivated to approach it with an open mind, and it won't take a week. I think it's a process. It takes time. The first advice I would give a new investor is to buy a little bit of Bitcoin and Ethereum to get the feeling. And once you have these, then you start reading about it. You get more interested, and then you can find a strategy then, or you can develop, a long-term strategy. And the best way and the safest, I would say, is dollar cost average, and don't time the market. See it as a long-time investment.
I think that's a very good advice. So quality information, and then start conservatively if you want to invest, if you want to take that opportunity. I mean, it's not an obligation, but what I would say is really to, even if you don't want to invest, but you listen, you have an interest to entering this space, you can also follow a course. To me, it's important to understand at least a little bit. Why? Because we mentioned a few changes in the industry, in the finance space, but I think it will also affect other industries, so that, like supply chain, law, because, with smart contracts, etc.
Yes.
I mean, this could be implemented more automatically. You make an insurance contract, and if conditions A and B are present, maybe this will trigger an action or an exchange of information or even money. So
exactly.
I think it's important to get educated, just to at least to be aware of what's
to
going
understand
on.
it. Yes, because I think that if you are very close-minded about this, what's happening, and you don't want to really learn, or I think it's going to be a very difficult century for you, to be honest. And this it's so moving fast and quickly, and you might really not notice it first, but then you might have a difficult time. And it's, as I said, it's a whole process to learn these things, and it's not easy, but it's important, I think, because our world will be around blockchain, and our world is dominated by financial services, and this is where money is, and they will go to crypto, they will go to blockchain, and so it's important for you as an investor to at least be more open-minded about it.
Mm-hmm. And even for your career. So, yeah, very good. So, yeah, Emanuel, thank you very much to bring your insights. I think it was very good. It's very overwhelming, but I think it will already help a little bit with understanding what's going on and to see a bit, kind of the trends. So, yeah, Emanuel, before we close off, we always have our 3 quick fire questions. So, are you ready?
Yeah, just go ask me anything you want.
Okay, so the number 1 question is, what is the best investment you made so far?
I think it's that I bought my own kitesurf equipment, which allows me to go to the Netherlands or the Belgian coast whenever the wind is blowing and be free, and to, just disconnect from the world. This is my passion, kitesurfing.
Oh, nice.
Yeah.
Okay, good. And you mentioned a few books, but do you have one book that you can recommend? It does not have to be on Bitcoin, but just one book that you say to the listeners, please read this. It will change your life, or it's really, I recommend it.
One book that I can tell you that really helped me, and I will sound boring, and you probably already know that book, but it's true. It really did. And that's, Rich Dad, Poor Dad by Robert Kiyosaki. And
I've never heard of that one.
No, but really, I could relate to this. That really helped me to think, to have the right mindset for personal finance, and starting to invest.
It's there's some good principles in that book. And then the last question is, what is the best purchase you've made for under 100 euros?
This is also a difficult question. I don't spend money. I don't know. I think it was a flight ticket for 15 euros from Brussels to Berlin and back to Brussels. That was probably the best that I had.
Okay, so Emanuel, thank you very much. It was a pleasure to have you. And then, for the listeners, what is the Facebook group where they can find you, and where they can participate into those Zoom meetings?
Yeah, everyone is welcome to join there. We have all kind of levels, newcomers. We have so-called crypto OGs, also old investors, and the group is called Crypto Financial Independence Europe. You will find it on Facebook, and everyone is welcome.
Okay, very good. I will link it in the show notes so the listeners can find it. So Emanuel, thank you again. It was a pleasure.
Thank you very much, Jonathan. And until the next time. And next time, please join our next meetup, which will be on the 22nd of June at 8 p.m. And it's going to be with a guest speaker who is a decentralized finance expert and founder of Crypto Testers, who has done interviews with many important and famous crypto entrepreneurs. And he will give my audience an initiation to decentralized finance.
Okay, but that sounds interesting. Yeah.
Yeah, definitely.
Okay, very good. Thank you. And so the listeners, just look at the link in the show notes and then you can register for that event.
Yeah, it's in the group. So you just join the group and then you will see the event. Exactly.
Perfect. I hope that you enjoyed this episode and that you learned something from it. And if you found it useful, please make sure you share it with a friend, or you can also rate the show in your favorite podcast app. This will help the show to grow. So if you do so, thank you very much. And now, before I let you go, let's go through the key takeaways for today. Number 1, what has caused the recent price increase? Well, to start with, Bitcoin moves in cycles of 4 years. That is when a halving takes place, meaning that Bitcoin rewards for maintaining the security of the network are reduced. And this also cuts the rate at which Bitcoins are mined. This then creates a scarcity which can push the demand up and hence the price. There were a lot of companies, such as MicroStrategy, pushing the price up, showing enthusiasm, and then this also created with itself a wave of institutional money flowing into Bitcoin, and as well major announcements from large companies such as Tesla or Visa. And then in addition to that, there were unfortunately some unhealthy leverage trading by some retail investors. The majority is still driven by institutions. Number 2, is there a right price for Bitcoin? Well, bold statement, no one knows. So whatever you hear, everybody has his prediction, but in reality, no one knows. Sure, the money printing creates inflation and crypto assets are a good way to hedge against inflation. If Bitcoin disrupts gold, we could even see values such as $500,000. It's crazy, but if you think of it, it really works. If Bitcoin reaches a 10 trillion market cap and there are 21 million Bitcoins maximum, each Bitcoin will be around $500,000. It's just mathematics. Emanuel sees the value going up as Bitcoin is deflationary, meaning limited supply. It is really hard to put a target or a correct value, but if you believe it has room to grow, the best is to dollar cost average over the long term, meaning you put a small amount into it over the long haul. Number 3, could Bitcoin become a currency? It's hard to tell, I have not seen many use cases, but Bitcoin just became legal tender in El Salvador, so let's see, who knows? Number 4, Ethereum. So Ethereum is the basis of a new financial system. The traditional finance is being rebuilt on the Ethereum network. Regarding DeFi, decentralized finance, the bank fees that were going to the bank, they become yours. So you will be able to get higher interest rates than in traditional finance. And then last but not least, the trends to watch in the space. Well, we talked about security tokens, so asset-backed tokens represented on the blockchain. They are still relatively small, so they might represent an interesting investment opportunity. So keep them in your radar. Regulations are on their way in Europe, so big things are coming. We were talking about a digital identity, so who knows what will happen there. And then 3, and that's maybe the biggest conclusion of this whole episode, develop your blockchain skills, learn about it, read about it. Cryptocurrencies and blockchain technology are not going away. They are the future. They are here to stay. So that was it for today. Thank you so much for listening. It really means a lot to me. Make sure you subscribe in Apple Podcast. And of course, please do not hesitate to contact me. If you have any questions or feedback, send me an email, john@joneytalks.com, or connect through social media at Joney Talks on Facebook, Twitter, and Instagram. And amigos, once more, thanks so much for listening, and I'll speak to you next time.